Hey everyone, this is a trader investor. In today's video, we're going to talk about the importance of broadening formation, the importance of manipulation area. This is what I call a lot of times when I talk about manipulation. It's really a broadening formation, and I will explain that very clearly today. Why you should not jump into a trade just because it's a breakout, right? All of you breakout traders, in the last couple of days, you've seen the market do what you're not expecting it to do. And that's because of just a simple fact of understanding what a broadening formation is and how to really trade that broadening formation. So let's look at the spies, and we will look at the Qs also as another example. But where I start off is I look at the monthly. I look at the monthly, and as price is driving down, I want to see areas where it could continue to drive down, right? Those are areas that I want to mark, right? So from here, when we breach this low, we went down a little bit, reversed, and so the idea is when we breach it, do we stay there or do we reverse it? Most of the time we will reverse it, even if it's for a short period of time. In this case, a short period of time is 1 month, right? We're looking at a monthly bar. So we breached it, and then we continued up, and then we breached the second level, and this time around we did not continue to go up. I'll go into the mechanics of how you pull the trigger when you see these things happening, right? So when you're seeing this is a broadening formation taking place, right? This is what a broadening formation is doing. So when you're seeing this broadening formation had occurred, of course we blew through it, but that's how we start, right? Before the beginning of January 2022, you had that broadening formation. That's the starting point. So if you understand that, right, and broadening formation is both top and bottom, but I'm focusing on the bottom side now because that's where we're playing, right? That is where we are right now. If we are on that bottom side, that is what we are going to look at. That is what we are going to look at. So if you say, I want to see the top side as well, it's right there, right? But we don't need to draw it for now. It's not that important for us. So I will come back why I call it an area of manipulation. I will come back to that. But the starting point is we draw it on the monthly, and then when we look at the weekly, we can, that line is there for us. We want to see what it's doing. That line is there for us on the daily. That line is there for us on the hourly. All right, so why do I call it an area of manipulation? Well, when we form a support, this is what most traders call, right? They see a line, this has touched a few times, I'm calling this a support. Fantastic. You can trade supports, but you don't trade supports blindly. What people were expecting is when we come to support, it should reverse. If it reverses, I'm entering long. If it doesn't reverse, I'm entering short. That's the idea. But without waiting for some sort of confirmation, that is not a good idea. That is not a good idea at all. So you need some sort of confirmation. And the confirmation will come in the form of price drives down, and then it reverses up and makes higher lows on the way up. That's your confirmation. Or if you want to say, well, I like this breakout pattern, but I want to see confirmation making lower high and using this support as resistance. if we breach this on a close basis, not on a wick, but on a close basis, if we breach this, then there's no entry. So that's why it's important to understand this is an area where people get manipulated. They broke the support, they know people are using the support, they broke it and immediately reversed, trapping those short sellers. And the long sellers were also trapped in this trade because they entered as soon as price touched, expecting a reversal, and they were trapped. If they have a stop right below the support, they were out. If their stop was wide enough, they're in a happy place right now. But both sides were trapped. So that's why it's very important to understand this area of manipulation. You have a support, you break that support or you maintain the support, but you want to see higher lows or lower highs depending on the direction you're going. Very, very critical that you look at that before you enter a trade. So now, how do we pull the trigger? Well, price came down on that monthly, weekly, daily, hourly. You see it in all time frames. Price comes down there. How do you know that price is reversing? And I mentioned this in Discord. I'll put a link to that Discord channel in the comment section. Make sure you check it out. This I and some couple of other friends, we call out plays daily, right? So that's our goal, is to keep teaching people how to do the right thing. And I mentioned how I entered this trade. And the way that trade played out is when you see okay, on the hourly, we kept driving down. Every day was a down bar, with the exception of one in the middle here, right? Even if you look at this whole down move, we have more red bars than we have green bars. Don't worry about my color coding, but my solid yellow ones are up, red hollow are down. So just know that. So up, very few up, and a lot of down bars. However, something happened that is interesting on Monday. We had our first up bar in 16 hours. That is not an entry, but this up bar breached the previous high, the previous bar high. And we didn't see a lot of that happening, right? It was always very small breach, like in this consolidation area, very small breach with, and here these two bars, yes, but then this area here, when these two bars kept driving, this area was an area of resistance, bar to bar. For all of you strat traders, it's very important to look at the bar to bar magnitude where you could stop. So that's a key part on how you enter these trades. So on Monday, when we had our first green bar, it was something to pay attention to. Is the next bar red like it did on Friday, or does the next bar want to continue to move up? So my entry, knowing that this is an area of manipulation, knowing that shorts were trapped and the short covering will fuel short-term push, right? Doesn't have to be long-term, short-term push. When you're doing options, especially short-term push. This was my entry, and this was an area where price could stall, and this is an area where price could stall, right? Knowing this, and we had this gap. If it goes through these areas, it's going to close the gap. So my last exit was here. This extra bit that pushed up, I don't have to go for it, right? So for me, this is how I'm looking at my exits when I am entering an option play that I want to get out that same day, because it's a down market. I don't know how long this rally will last. And when you're looking at some Fibonacci's. This rally did not go above 50%. So as long as I'm not above 70%, 78.6%, I'm not so sure we're done with the down move. That's why I want to get out as quickly as possible. So what I called out was, hey, we bridged the high. We bridged the high of the 8:30, 2 hours into the trading day. I'm in the Pacific time zone, so 8:30 is 2 hours into the trading day. We breached that high. I said don't enter the first time, but if the second bar, because this bar, as you can see, did not close above, right? It tested it, came back down. When the second bar opened, I said, hey, if it gives us that entry again, we're taking it. We're taking it, and knowing that we could exit here, we could exit here, and we could exit here. And my first exit was to take 50% of my position off at this signal. It was a good decision because price pushed up, gave me that exit. It almost went to my second target, but it didn't give me my exit and came back down. My stops are very, very tight at this point. If we breach the low of this bar, I'm exiting. By the breaching, I always mean a close, not a wick. So the next bar, I hit my second target. Very happy, another 25% of my position off. And then by the third bar, the rest is off. Beautiful play, beautiful play. Why was I comfortable to take this play? Because I knew this was an area of manipulation. If you know this is an area of manipulation, then you have no fear when you take a trade, right? It doesn't matter if you're wrong at times, because you will be wrong at times. And I will show you an example when we look at the cues, how just because you breach it and you have the broadening formation, that you don't take it at that spot, right? So very critical to know. It's everything must come together, right? You must have a confluence. The monthly showed you that broadening formation, and then on the hourly, do you get a reversal at the manipulation area? Why do I emphasize manipulation area twice? When you look at the cues, the manipulation area was breached, but we still stayed below it. And what does that mean? The breach and the reversal did not happen at the manipulation area. It happened much, much lower. If you are confident that because the spies, and pay attention to where the reversal happened on the spies, right? It happened right at the line of that breach, down, up, done. But in the cues, at that line, down, 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 and then up. So that breach happened much sooner for the cues. I don't take this trade. I don't like to see this reversal, because to me, what this tells me is, because I am driving the price down, I'm going to make a lower high and drive the price lower. This is what I see and not participate for that reason. Spies gave me that better entry. If you had some confidence that spies were leading the cues, you could have taken this trade in the cues as well. It's up to you. But the spies were the better setup, so why not trade the better setup? I don't like guessing games. I like to trade what I see. So this was a better setup. And exiting here was the right decision. Now, what's important here? We are forming a higher low. So from here, I'm expecting price to drive because we're forming a higher low. If instead of making a higher low, price decides to make a lower high and reverses, then we have room to go down some more. Because we could reach for other monthly pivots, if you're looking at the Qs or even the SPYs, look where price came down, right at that broadening formation and a previous month's July low, right? It came to that July low on the weekly basis, right? It came down to that, and it was that whole July month's low for this bar. So it came down there, so price could continue to push down some more and head back down that way. That's why it's I'm not in a hurry for this bullish momentum to resume. That's not what I am suggesting. All I'm saying is when you get an area of manipulation, very important to know that part. When you get to an area of manipulation, do not trade it yet. You wait for some confirmation. It was down, they manipulated the, so here's key. Let's make this better for you to see. Here's very, very important to see here. There were traders that would say, we bounced from support, I'm taking a long position, right? The next hour, they're still happy because price had gone up and it's formed an inside bar. They're hoping that they break the high of this inside bar to take it up. That's their expectation. However, it went down on them. So these people were taken out by this push down. But this push down was to trap short sellers. And this push down, then the next hour, if they're not out, the following hour they were out, and that fueled the push up momentarily. Critical to understand momentarily, because we're in a downtrend, right? We're in a downtrend. We're not in a hurry to say I'm continuing to push up. So that's why it's important to understand, like, okay, the manipulation is done. These people were trapped. The manipulation is done. Price went up. They created a demand zone. They came down to that demand zone and continued to push the price up for now. So as long as you understand area of manipulation, right, and look at it at various time frames, what is the monthly telling me it's going on? What is the weekly telling me? What is the daily telling me? All of them are saying something, right? All of them are saying something together, collectively. There will tell us the story. And so that's why I like to look at all time frames, and that's why this chart setup is here for you, so that you can understand, okay, now I know what broadening formation is. It's formed to manipulate and reverse price, at least momentarily. As I showed you, the manipulation happened in last month, in not last month, in November, December, no, between November and December, that manipulation happened, trapped, reversed, but then we came back down, right? If anybody didn't take a loss, if they didn't have a stop on this, they were sweating it the whole month of December, but they're probably happy today. I hope they're taking profits, but that's neither here nor there. The point is, make sure when you get to an area of manipulation, you know how to look at it and you know how to trade it. All right, everyone. Hope this is helpful to you, and I will see you in the next video. Take care for now.